Thanks for joining us today. We're here today with Marqus White, tax partner at Sachs in our nonprofit group, and we wanted to pick his brain a little bit about tax returns for nonprofits. So, Marcus, what's the deal? Why do nonprofits have to file a tax return if they don't pay income taxes?
Well, good afternoon, first and foremost. Um, it's a filing requirement due for two reasons. One, compliance for the IRS to maintain your exempt status, and two, for state charities bureaus. Again, to make sure that you are using donated dollars for the right purpose, and the charities to give the consumers of that state comfort that the charity is real and legitimate.
So is it an actual tax return that you're used to put your income and expenses, or is it something else? Is it
Absolutely, it is. It's both. It's a marketing tool. I like to broadcast it as, but it does provide financial information of the organization as well as it tells the story of the organization.
Sometimes I would joke that there's more words on there than numbers. For
Oh,
nonprofit
absolutely.
all about their mission and what they do, some of their programs, right?
100%. It should really tell the story of the organization, especially on page 2 when it looks at the programs itself, the detail. I always say you want to say what we do, how we do it, and who we do it for.
So nonprofits really take it seriously and really use it to describe the mission, describe what they do, and really show themselves off, right?
Absolutely. Got to remember this is a public document. So being an exempt organization, it is open to the general public. So the world sees what happens in your organization. So you've really got to tell the story accurately.
So can't hide anything.
Can't hide.
So there's different types of returns that a nonprofit can file, correct? So what are some of the differences and what do they qualify? How do they know?
So basically, if you're anything except for a religious organization, and they could be required to file depending on certain circumstances, but let's just X them out of the equation. So you could file a 990N, which is basically called a postcard. So if your receipts are normally less than $50,000 a year, and your assets are very little or minimal, you actually can file this online electronically, and it would cover your compliance for the tax year. If your receipts are over 50 but under 200,000 and your assets are under 500,000, you can file what's called a 990EZ, and that's the short form. So it is definitely more compact, much less forms to do, and much easier to file. And then, of course, the big daddy of them all is the regular 990. It's 12 pages of a core form, and it could be schedules A through R. Could possibly be done. It was a big transformation back in 2008, and before that, it was about 35 years of, I call it simplicity.
Sure. And so nonprofits could also be different types of nonprofits, right? So the first kind we usually hear about is a 501c3, which is kind of your more common charity that an individual donates to, but there's others as well, right?
Correct. Correct. So again, religious organizations fall under there, but also educational, social services, research organizations fall under C3. But you have like C4s, which are like leagues, social welfare. You have C5s, which are unions. You have C6, which are business leagues, chambers of commerce, and another popular one, C7, social clubs like golf clubs or those kind of things, or sororities, fraternities. So you can basically go from C1 to C29 and still be quote unquote exempt.
Love them.
Yeah.
So nonprofits are saying tax exempt, they file a return, but not really for tax purposes. Is there ever a time when they may have to pay taxes?
Well, maybe.
Okay.
So federally, there could be two instances if you're subject to unrelated business income tax, or you could have possibly be subject to excise taxes, depending on if the exemptor does things that they have to get their hands slapped for. On the state level, again, some states have tax on unrelated business income as well, and you have your registration fees on the state level. So, is exempt really exempt? Maybe.
Are there certain examples you can think of off the top of your head of UBIT, of that unrelated business income?
So the dreaded UBIT, UBI they call it, unrelated business income. So there are certain things that are by statute subject to tax. There are certain things by statute that are UBI or unrelated business income, but maybe not subject to tax. So, for instance, special events in the statute is unrelated business income because it's something that's not program service or related to your mission. But as long as it's done infrequently, it's not subject to the tax. So things that are or could be, rental income's a good example. So in the statute again, rental income is not subject to unrelated business income tax unless the property has debt on it. Then there could be a tax position at that point or tax filing. Advertising. So, commonly you go to galas and things and there are booklets or journals and there are advertisements in there. Mm-hmm. So, very simple. If it just says congratulations from XYZ accounting firm on your 25th gala, that's not advertising. But if it says congratulations from Mr. and Mrs. Investment Company, we specialize in 401b, 401k plans. We can make your life easier. Come visit us at 5 Red Spire Drive in Omaha, Nebraska, and we will guarantee that you get the best service. That's advertising. Mm. So you got to distinguish that piece of it. But those are probably the most common. One other thing is providing services. So back office services for related entities are normally not subject to UBI. But if you are doing those services for unrelated entities, then that can also be considered unrelated business income.
So should nonprofits be afraid of UBI?
Absolutely not. There are some good things. Look, we didn't even talk about investments, but I didn't want to get that granular. But sometimes you can get a building donated or a commercial building that is a good piece of investment. And if you're not using it the majority for your programs, you rent it out. It could be a good source of revenue to help sustain the organization's mission, as long as it's not substantial. It's okay. You file the Form 990T, which is the C Corp form for exempt orgs, and you have direct and indirect expenses. And if there's a tax after the $1,000 exemption, pay tax. I think the cost benefit will outweigh itself as long as it's not substantial in nature compared to your good sources of revenue, gifts, grants, contributions, or program service revenue.
Mm-hmm. Yep, very good point.
Yeah, no, this has been really informative. So, I guess closing thoughts, anything else that someone should know about 990s or maybe just tax in general when it comes to nonprofits? What's the one big thing, the one big highlight in your mind that someone should take away?
So I would say two things. One, especially for newly formed organizations, be careful with your support. Try to get as diverse as possible, because you have 5 years to prove the IRS that you are a public charity and not a private foundation. The second thing would be transparent. If there's anything that you think should be disclosed, disclose it. This is a public document. You don't want any skepticism. You don't want any doubt that you are doing the right thing by your organization. And then the last absolute thing is be descriptive. Tell the story of the organization so the world can see what you're doing, the good work you're doing, and they want to not just donate, but volunteer.
Favorite section of 990?
I love it all. I don't have a favorite. I love it all.
No, all right.
He loves it all. All right. Well, thanks for joining us, Marcus.
Thank you.
Yes.